Welcome back to Real Estate Simplified. The real estate market has been heating up ever since the Corona shutdown earlier this spring. Sami, what impact is this having on lending right now?
Yeah, definitely. So I've seen a few different waves of what's been prominent and what hasn't within my personal book of business. I've seen there have been a lot of private investors in the early stages who were pulling out. They were, kind of fearful of what was going to happen and on the unknown. And I was seeing a huge demand increase for private lending needs. And that was just by way of private investor capital kind of leaving the market. And now what we're starting to see is now that things are settling back and we're starting to realize that this is the hottest real estate market we've probably seen in a really long time, that the more influx of investor capital, the more confidence is coming back and it's kind of rising, and we're going to see a huge spike in increase of homes, and average even the transaction amounts are starting to increase quite a bit.
Yeah, this really reminds me almost of the spring of 2017 with the market activity.
Right.
Jacob, are you seeing the same thing?
Yeah, same thing. I think, with the surge in transactions, there's more and more pressure on lenders, which is impacting service times. We're also seeing too is that it's so competitive that the offers are being put out with such tight parameters, whether it's a 3-week close and that's what you need to do in order to win the file. So we're seeing, sometimes we need extensions on closing potentially or things like that, just because people are doing whatever they can to actually win these houses in these offer competitions. So the pressure is then getting put on the mortgage agents, which is then getting put on the lenders, and everyone's kind of feeling the heat right now.
Yeah. Are lenders tightening up right now? Is that what you're saying, or what's going on?
I think, at the beginning of COVID, there was definitely some tightening up, things where if somebody was on an employment contract for the next year, a lot of lenders would be like, okay, that looks great. They've been in the industry, a few years. Whereas COVID came in, they said, okay, well, we don't know if these contracts are getting renewed with COVID. So there was some tightening up. I think we're just slowly starting to see the door open back up right now. I don't know, Sami, if you're seeing the same thing where, we're looking at kind of similar lending practices to before COVID.
Yeah, exactly. I think as the months pass of COVID, we're starting to come back to normality, although I don't like to use that word when we talk about COVID, because I don't think we're going to see the old norms come back. But yeah, I'm starting to see that right now. There are a few different changes that are coming up in terms of the policies, but the lenders are being quite great in terms of identifying what those changes are, what those changes could be. What I'm really starting to become a fan of is how can we put in the most competitive offer. It's starting to become a little bit of a game. And if your realtor and your mortgage agent are not working extremely close with each other, it becomes difficult to put in that best offer, like you said. It's no longer about price. It's about what terms, what conditions, what financing subjects can we remove, what kind of other subjects can we remove, and what can we make to appease the buyer and seller. So it's a really, really close game of communication between all parties, and I'm starting to see, like you said, that 2017 pre-market happen again.
Yeah, and Jacob, you mentioned people eliminating conditions. What can mortgage professionals do to help buyers be competitive and win in multiple offers?
Well, I think, it all starts with being proactive, right? So it's getting documentation from clients up front so that you see exactly how the verbiage is laid out on a letter of employment or something that does impact a file. A lot of times clients will say, yeah, I make this amount of money, but of course, they might make that amount of money, but on paper it might be a slightly different figure, and just one slight tweak in an income figure can drastically change an application. I think the first thing is getting all your paperwork up front so you know what you're dealing with. The second thing is really just understanding what works and what doesn't work with lenders. You're only as experienced as many files as you've done. So if you're someone who has 10 years experience, but you do a small amount of files per year, maybe you don't actually have that much industry experience. So I think having seen a lot of different situations, that should help. So whether that's yourself, or if maybe you're a newer agent, maybe you surround yourself with more experienced people who can help consult you, because there might be a situation where you tell a client they can go firm, but the one thing is you need to know that here's contingency plan B, here's contingency plan C, and right now with the rates being so low, we're seeing the alternative space rates drop as well, and the alternative space is now an option for people on the A side, whereas before they would never even entertain it. Right? So I think that's giving a little bit of alleviation in these offers too, because it gives us a bit more flexibility kind of thing.
Yeah, 100%. Sami, just going on what Jacob said, how can buyers take advantage of these ridiculously low rates right now?
Yeah, definitely. So I would say start to get prepared as early as possible. There are a few strategies and tweaks and things that we can do to make your mortgage planning process a little bit easier. I'm starting to see a lot of different realtors and home buyers push towards the pre-construction market because it's not overinflated. I'm starting to see a lot of people who are going in towards that value add real estate approach. I'm starting to see a lot of buyers who are purchasing in areas outside of what they used to consider the GTA, and it's just extending into that golden horseshoe area of Ontario. I think in terms of buyers who wanting to be competitive and take advantage of these low rates, I would say get approved as quickly as possible, because holding an approval can sometimes be easier than fighting for a rate drop. And I think rates are so low that the rate game is almost irrelevant. As Jacob had mentioned, the alternative lending rates are so low and people usually wouldn't consider them. But now the cost of borrowing is so minimal that, I think it's a great time to take a risk and take a shot in investing in real estate.
Yeah, absolutely.
And just to add to that, not sorry to interrupt, but even outside of buying a home, right, you should just book a call with your respective mortgage agent, because you might be able to look at your personal situation. Can we just get myself out of a higher interest mortgage into a lower one? Can I consolidate some of my debt? Well, now's a great time. You can consolidate credit card debt, car loan debt, or what have you under 2% in a mortgage. It might not even be for the purpose of a purchase, but maybe just consolidating some of your existing items.
Yeah, dropping down from 19.99% to 1.8, so it's pretty good.
Yeah.
And Jacob, what are some mistakes you're seeing right now buyers making? Like, are there any mistakes just because of the hot market?
I think, the main thing, it's really just the planning piece, right? So the main thing I think that a lot of people aren't necessarily, they're usually checking with their mortgage agent about what price can I offer. They're not often checking in with their mortgage agent about how quick can I close on this property, right? And usually that's causing a little bit of issues with some of our clients. But I think the main thing is, just doing your budgeting in advance. I think one of the biggest mistakes I see people make is thinking that they need to stay within a certain price range because psychologically the number 600,000 sounds good in their head, but they might qualify at 650 and realize, hey, my mortgage payment's only $160 more per month. If I get a $3,000 raise this year or what have you, that's going to cover that cost, right? So I think understanding the cost associated with the products makes a lot of sense, especially when you look at something like, the private lending side Sami was talking about earlier. Well, those are interest-only payments. So if you're getting in that short term, often, that's a really affordable option that people aren't thinking is affordable because psychologically they're just thinking about the interest rate or the purchase price or things like that.
Yeah, I'm glad you brought that up, because in real estate, when you're living in a home, you're living on that monthly payment. So the total purchase price is almost irrelevant at that point. It's all about the monthly payment. Well, guys, this was a great episode. So Sami, Jacob, thank you so much for joining us today.
Thank you.
All right, thanks so much for having us.
Yeah. And thank you for joining us. I'm Seth Ferguson, and I'll see you next time on Real Estate Simplified.